96.7 FM, WTOB. You're listening to The Wealth Guardians with Doug Ray, helping you retire the job and keep the paycheck. I'm your host, Doug Ray, and with me is Brice Payne. Today, we got a really interesting show for you. We've got some real-life case studies. Some go all the way back to the Great Recession, so stay tuned. Morning, Brice. How you doing?
Doug, I am doing fine. How are you doing this morning?
I can't complain a bit.
Very good, very good. I'm actually a little bit excited, not just to do the show, but as you know, the wife and I have been planning to have a deck built. For
a year?
For over a year now, we've been planning on this. They have finally gotten started on it. The old deck is taken down, and they've got the framework for the new deck up as of the other week. And now they've just dropped off all the Trex material today. So this has been a long delay. And this kind of goes to the supply chain issues, two issues, the supply chain issues and the great resignation out there. This deck is probably going to take about 4 months to be built from start to finish. And I asked them, is this how long it usually takes to build a deck like this? And they said, no, we can usually get it done in about 2 months. But his staff is cut in half. He just doesn't have the workforce that he usually has. And then, of course, the other issue is that he had to put the order in for the materials months and months in advance to make sure that they were here on time. Not something, obviously, that normally happens. But they are about, right now, 8-9 months out from getting started on, from when they take on a job to when they actually get started on it. So, needless to say, the wife and I are excited where they're out there right now starting to bang away and saw away, and we're looking forward to mid-spring to have that deck finished and we can go out there. But that's how I'm doing. I'm excited for that. That's at the forefront of my mind. Before we get started on our show here and talk about these heartwarming stories that we've accumulated over the years of you and me doing retirement planning, let's do our tip of the hat to our men and women in uniform out there.
Absolutely. We do want to say a great big thank you to all of our service members, our veterans, our first responders, and your families. Thank you so much for those sacrifices.
Especially the families out there. We know you go through a lot. Doug, thank you for your service as well. So what we wanted to talk about, Doug, today in light of what's happening in the economy out there is we want to tell some heartwarming stories and the importance of having a financial planner, not just an investment advisor or a broker, but a full financial planner on your side. We've got some seminars coming up, and it's retirement in turbulent times, and we hadn't planned for the market to be doing this when we started putting this seminar together. But now that we're doing this seminar coming up next week, we wanted to just talk about some stories that kind of relate around the benefits of having a financial planner on your side. And Doug, you and I are certified as retirement income certified professionals. We're certified with the National Social Security Association and a few other credentials under our belts there. But I'll start off with talking about a couple that we were meeting with in 2021. They had come to us because he figured he was going to have to work a couple more years, and he really wanted to rest assured that he didn't have to work more than that, because he was tired of working for the man. He was ready to hang it up. He wanted to sit back and enjoy life with the wife, and he just didn't know when that was going to happen. He had figured it would be a couple more years. So we sat down with this couple like we do with all of our couples. We go through the retirement planning process. As we've said here before, it's generally a 4-meeting process. First meeting is the discovery meeting. The second meeting is where we've run a number of different analyses, a Social Security analysis, a fund analysis, a fee analysis, a risk analysis, a risk tolerance analysis. We run all of that. And then in the third meeting, we start putting a plan together, and we take a look at how retirement's going to play out for you year by year. Really what we want to find out is what's the best reasonable case scenario that we can put forth based on our recommendations, with you meeting your spending needs and taking as little risk as possible. And what we found out in this particular case was that if he changed his portfolio around based on our recommendations, he was not expecting this. But we told him, we didn't tell him, we showed him the numbers on our software that said you can actually retire right now. You have already done enough savings. Even if you lowered your risk significantly and lowered your expected growth to a reasonable amount and not a risky high amount, you're set to retire now. And it was funny. I was not expecting this, but they came back in for their fourth appointment, which is where we run some summaries and hand them that binder that shows all the reports in there. And if they want to go ahead and implement the plan that we put together, they can do that at that point. And came in and sat down on the fourth appointment, and he says, well, I'm retired.
Yeah, I remember that.
So, beg your pardon? He says, yeah, I turned in the resignation to the company. You showed me the numbers. The proof is in the pudding there, and I've retired, and I'm no longer working. You showed me that I can do it, and we went ahead and did it. Well, certainly appreciated his trust in us and the numbers. That spoke volumes, but he was happy. I mean, he was generally really pleased that he thought he was going to have to work a couple more years. This was a great scenario. And he is now well established, well allocated in his portfolio, that even when those turbulent times happen in retirement, maybe it's starting to happen right now. But Doug, a bear market happens how often? A correction period?
On average, about every 7 years.
All right, so if you're going to be retired for 20 years, that means you're going through at least 2 of those, if not 4, maybe even 5. Correction periods during your retirement. So we know that they're going to happen. We're not like Punxsutawney Phil out there who says this is when it's going to happen, but we do know it is going to happen. So we prepare for that, and we had his plan all prepared for that as well, and he was just excited as can be, and he knew that no matter what happened in the markets out there, he was going to be in good condition. And he retired, and he went ahead and became a client of ours right after that. You know,
Brice, we've had probably several cases similar to that. That one, when he retired right away and didn't tell us, I mean, that was a surprise to us.
That really was.
But it amazes me how many folks come to see us thinking that, I got to work 5 more years or 10 more years. And we show them right then and there, no, you don't have to do that. You can retire today if you want to, or maybe work another year just to make sure we got icing on the cake, right? So it's an amazing situation to watch the process go and play out with these people.
With our clients.
Yeah.
If you're just tuning in, you're listening to The Wealth Guardians, and Doug and I are talking about heartwarming stories that he and I have accumulated over our years of doing this. And Doug, we're talking about the gentleman that we met with in 2021 who was sure when he came into us that he was going to have to work for a couple more years, and he just wanted some confirmation that he wasn't going to have to work for 5 more years. But we actually showed him that he could retire now. Tell us a little bit about the process and what we changed for him that made him realize that.
Well, he came to us with a typical Wall Street portfolio. Bonds and stocks, and mostly stocks. And his risk was pretty high in the portfolio, it was higher than he realized it was.
Which is always the case.
Was always the case. And so what we did is basically, after we gathered all that data and we did all that process work you talked about a moment ago, we allocated his portfolio so that, number one, in a bear market, he is not going to lose money like he did in 2008. We're controlling that downside for them. And, in a 2008 situation where the markets were down over 50%, we're going to be down, but not that much. We're going to be down about 9, 10, maybe 11%.
That's what we designed the portfolio for anyway.
That you can recover from. You can't recover from 50, 55% down. It's even hard to recover from 30% down.
I know that a lot of people out there are listening saying, well, yeah, I've gone through those bear markets before and it didn't change anything for me, but it's a different story when you're in retirement.
It sure is. The old adage is, would you rather stumble and fall going up the stairs or down the stairs? And when you're in retirement, folks, you're coming down the stairs. Now, I want to tell you, we've got a great workshop coming up. It's called Retirement Success in Turbulent Times. When we put this together, we didn't realize we were going to have the January we just had. And we've had a little bit of a bounce in the market now. I expect we'll have a little bit more of a bounce, but January is pretty rough. And this year, I think, is going to be extremely volatile. So Retirement Success in Turbulent Times, that starts next week, February the 10th. That's a Thursday. It's 6:30 in the Broyhill. And then the following Tuesday, the 15th, again, 6:30 in the Broyhill in the auditorium there. All you have to do is give us a call, 336-391-3409. You do need to register because I think this one's going to be sold out, folks. I think people are a little bit antsy right now seeing what's going on in the market with inflation Ukraine, and goodness gracious, we got so many issues going on. 336-391-3409.
And you say sold out. There is no cost to attend our seminar.
Well, right.
But like Doug says, you do have to register so that we know how many seats to have ready and that we're not overly booked. But we do have that coming up. As Doug said, 336-391-3409. The timing couldn't be more perfect than right now. The last time we went through any volatility like this was back in 2008. January was the worst month in a couple of years that we've had. And are we going to have more months like that? We don't know. But we do know that you're concerned about it, and we want to address those concerns, particularly when you're approaching retirement. We're going to be back after a break, but we are about to do the trivia question of the week.
It's time for the Wealth Guardians Trivia Question of the Week.
Doug, Wednesday was Groundhog Day. Now, of course, one of my favorite movies. Punxsutawney Phil has accurately predicted the end of winter what percentage of time since 1988? That's when they did the test. What percentage of the time? How accurate is Punxsutawney Phil on a percentage basis? We will be back after this and see if Doug knows the answer to that. This is Brice Payne. With me is Doug Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is 96.7 FM WTOB. 96.7 FM WTOB. You're listening to The Wealth Guardians with Doug Ray, helping you retire the job and keep the paycheck. I'm Brice Payne along with Doug Ray. And this segment, we are sharing some of our heartwarming stories that we have had helping clients learn how to retire that job and keep the paycheck from our years of doing this. And before we go back into more of those heartwarming stories, it's time to see if Doug was able to get the trivia question this week.
It's time to get Doug's best guess for the Wealth Guardians Trivia Question of the Week.
Doug?
Well,
Wednesday was Groundhog's Day, and Punxsutawney Phil has accurately predicted the end of winter what percentage of time since 1988?
I don't know the answer to that, but I do know that 6 times out of 10, he said there's going to be 6 more weeks of winter. Now, his accuracy? Tell me, Brice.
It's 39%. 39% is how accurate Punxsutawney Phil is in determining when the end of winter will come. Now, I don't know exactly what is the definition of the end of winter. Does that mean no more freezes? I don't know that, but I do know that 39% is you've got a better chance of flipping a coin and coming up with the right answer than you do with Punxsutawney Phil.
I just want a weekend without snow and ice.
Yeah, exactly. We've been going through that, and up there in Pennsylvania, they've had it worse than we have here, as they always do. But I brought up this particular question because if you had a financial advisor that was right 39% of the time, you might consider, do you need a financial advisor or do you need that financial advisor? We, kind of like Punxsutawney Phil, trying to predict when the seasons are going to change, you and I try to look at when the market seasons might come and go and ebb and flow, but you have never put down an exact date on something. Within the next 6 weeks, the market is going to drop X amount of points. You've never said that. What we do know, though, is that change of season is coming at some point, and we best be prepared and plan for that, particularly for our clients. So that's kind of why I brought out that trivia question. But let me ask you.
That's good.
If you are 5 to 7 years from retirement and you want to confirm that you're making the best decision for your retirement, I've got good news for you. We offer a no cost, no obligation second review so you can learn to retire the job while keeping the paycheck. It's an invaluable service to anybody we offer it out there. Like I say, no cost, no obligation, but the ball is in your court. You do have to pick up that dialing machine and punch the numbers in this order: 336-391-3409. 336-391-3409 can get you seated down with Doug and myself, and we'll see what help and guidance we can provide you in learning to retire the job and keep the paycheck, and if you can retire now, because that's what a lot of people out there want to know. Or are they safe in case the next market crash is truly around the corner? Now, Doug, in our first segment, we shared a couple of stories, heartwarming stories that we've accumulated over the years, but you've got another one that you want to talk about.
Yeah, I do. This story is not necessarily heartwarming. It's a tough one. In fact, it's a story that in my 34 years in this business, it left me feeling absolutely helpless. This lady came in. We were in the teeth of the bear market in the Great Recession, somewhere in 2008. And she came in, she heard the radio show, and she wanted a second opinion on this variable annuity that she had purchased. And she'd gotten it from some Wall Street broker. I don't remember the name of the firm. It doesn't matter. So she put her entire 401k rollover, over $250,000 in this thing. Well, by the time she came in to see me, it was cut in half. She had 120, 30, 40,000, something like that left.
That hurts no matter. 50% loss hurts anytime, but particularly when you're in or approaching retirement.
Well, she was so misinformed on this investment tool. I just sat there shaking my head. She literally thought at the end of her surrender charge period, which would be in about 6 years, that she'd get all those losses back. And I had to tell her, I said, it doesn't work that way. You know, in a variable annuity, you've got mutual funds, and they get all the upside of the market and all the downside of the market.
Yeah, variable annuity doesn't offer any downside protection.
Well, Brice, she broke down and she started crying. I mean, hard crying.
Yeah.
I mean, the only thing I could do is just offer her some tissue, and you know, I explained to her, I said, you know, you're going to have to wait now until this market recovers, and I don't know how long that's going to be. And
that was a couple of years of recovery. If you were doing
it was about
4 or 5 years.
Absolutely. Yeah. So she was underwater for 5 years. You know, we don't let that happen to our clients.
We do not. We don't use variable annuities.
Use variable annuities.
No.
And it also is one of the reasons why you should seek counsel from a fiduciary.
Which we are.
Yep. And that broker who sold her that variable annuity obviously was not.
Explain what a fiduciary is. I know a lot of people out there know that name, but some people don't.
Very simple. We have to do what's in your best interest.
We have to. It's in our licenses and certificates. We can lose those if we don't.
So, you know, the planning process obviously was not there with this poor lady and her advisor. And it was just, I'm sure that advisor just saw commission dollars in front of his eyes. Her whole 401k. Unfortunately, I never saw that lady again. I hope she, you know, wrote it back up.
Yeah, definitely.
Yeah, you know, and folks, I don't know what's in store for us this year. I don't know if we're going to have a bear market like 2008, but I am convinced this is going to be a very volatile year. And I also am convinced that's one reason why you should come to our workshop.
Oh, we've got a workshop, do we?
We got a workshop coming up next week. It's called Retirement Success in Turbulent Times. We're going to show you how we keep you from losing 50% in a bear market. We've got that downside controlled. We're going to show you how we're going to cut your fees too. Now, that workshop, it comes Thursday, February the 10th at 6:30. It's going to be in Clemens at the Broyhill. And then the following Tuesday, the 15th, also at 6:30 in the Broyhill. You've got to call us to register or go online on our website to register. I think our event, we're going to have full capacity. So you need to call now, 336-391-3409, 336-391-3409, or go to thewealthguardians.com, click the events tab, and you can register right there.
A couple different ways to register.
Yep.
And if you're just tuning in, you're listening to The Wealth Guardians, and we are talking about heartwarming stories that Doug and I have accumulated over the years. And I want to go to another one, Doug. We're working with this couple right now, and this is a couple. They've raised a couple of kids, gotten them into college now, and they're wanting to move back to where they were from, up in the mountains. And he's been working for the same company for the last 10 years. He's done a great job of saving. Both of them have.
Yeah.
She's been a stay-at-home mother, but he's made a good living, and he's done a good job of saving. And he's really tired of working for the man. And he knows that what would really make him happy is not to retire right now. He knows he's got another 10 years of work ahead of him, but he doesn't want to work for the same company. He doesn't want to work under somebody else's thumb anymore. He wants to be his own boss. He wants to be a consultant. But he does realize, he's realistic in his expectations, that he's going to only make about 50% of what he's been making if he goes off and does this on his own. Well, this was a great opportunity for us to plan and show him our retirement planning software. So what we do is we collect all the information that we need to. It's kind of like laying out all the financial puzzle pieces on the board and finding the corner edges and whatnot and starting to put that together. And through our planning process, we showed him what his nest egg would be like if he continued with the same risk in his 401k that he was employing now, if he kept making the same amount that he was making now and kept contributing the same amount to his 401k, and they kept spending the same amount, they would have X amount of dollars by age 90, 95, 100, whatever age the individual wants to look at. And then we ran that scenario again, changing up a couple of things. Changing up their investments to where they weren't taking nearly as much risk as what they're taking now. If I remember correctly, he had one of the higher risk portfolios that we've seen come through there. It was higher than the S&P 500 as a whole. And that's okay if you're in your 30s or your 40s. That's a 40% drop in the market isn't going to change your life if you're in your 30s or 40s. And your portfolio goes through that same thing. But if you're talking about a significant income change and retiring in about 10 years, the ball game changes. You're now moving into the wealth distribution phase of life and away from the wealth accumulation phase of life. It's not something that happens overnight, but you got to guide yourself into it. So we showed him again with our planning software, let's change up some assumptions here. Let's say you are only making 50% of what you make now. That means that your contribution into your 401k is only going to be about half as much. Your income is not going to be nearly as consistent, perhaps. And we want to change the risk and the growth potential of your portfolio to where it's more moderate and less volatile. We're trying to lower the beta number on your portfolio there. And sure enough, he's still in just as good shape as he was had he continued working with the same company that he was working at with the higher income. So this was really news to him. He really wasn't sure if this was even feasible or not. To him, it was just kind of a pipe dream. But we showed him through our planning process that this wasn't just a pipe dream. It's in the works for him. It's in the cards. He can do this. He just has to change his portfolio up and make sure that they're making the same contributions and not spending more than what they've spent in the past. And that was great news for him.
And Brice, remember, she was totally against him going out on his own business. And then once they went through our process and she could see it in black and white, they were going to be okay, she got behind him.
Yeah, she was more convinced that him doing that was really going to have a much larger impact on their age 90 net worth. And we were showing them, no, it really doesn't. I mean, there's a little bit of impact there, but when you're talking the difference between $4 million and $3.7 million, at that age, at that stage of the game, is that really that significant to somebody like them? To them, it wasn't. And so, yeah, you're absolutely right. That she changed her tune. Says, well, no, if this is going to make you happier, let's do it that way then. And that's what we can do for you. It does require some planning. It does require some time commitment on your end to come in and sit down with us. But Doug and I are happy to do that. We don't charge you anything for that. You can attend our seminars that are coming up. You can come in and sit down with us. If you're not able to attend our seminars, no cost or no obligation, but you do got to pick up the phone either way. 336-391-3409. That's 336-391-3409. And we'd love to sit down with you and see what help, service, or guidance we can provide with our years of experience, just like we've helped all these other couples that we've been talking about in today's show. Doug?
Well, I just want to remind you about the workshop coming up. You might have just tuned in, so it's this coming Thursday, February the 10th at 6:30 p.m., all in Clemens at the Broyhill. And then the following Tuesday, the 15th, at 6:30. Give us a call, like Brice said, at 336-391-3409 and get signed up. You're going to need to call and register. I think we're going to fill this one up, folks. So 336-391-3409 or thewealthguardians.com. Hit the event tab. You can sign up there.
This is Brice Payne. With me is Doug Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is 96.7 FM WTOB.